Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is March 5th, 2026. Let's dive in.
Let's kick things off with the Indian markets. As we look at the Nifty 50 and Sensex, we see a significant gap down opening expected today. The GIFT Nifty suggests a nearly 539-point drop from its previous close. This comes amid escalating tensions in the Middle East, which have led to market volatility. Key levels to watch for the Nifty today include support around 24,270 to 24,250, with resistance in the 24,480 to 24,500 zone. In terms of FNO cues, expect heightened activity in energy and trade-linked sectors as investors navigate the impact of higher oil prices on India's import-reliant economy. The India VIX, our volatility index, has surged over 21%, indicating increased market volatility.
Turning our attention to international markets, the picture isn't much rosier. In the U.S., both the Nasdaq and S&P 500 experienced a pause in their sell-off, but investor sentiment remains cautious due to the U.S.-Iran conflict. European markets like the FTSE and DAX opened higher, despite inflation concerns driven by rising energy prices. Meanwhile, Asian markets are under significant pressure, with South Korea's Kospi Index experiencing its worst day in history, down over 12%, leading to a trading halt. Commodities like oil continue to climb as traders weigh geopolitical risks, which in turn is influencing currency markets. The rupee is under pressure, while the US dollar has paused its haven-driven gains.
Now, let's delve into some major corporate stories from India. First up, Reliance Industries is reportedly facing challenges in securing crude oil supplies due to disruptions in the Persian Gulf, impacting its refining margins. Meanwhile, Tata Motors is seeing mixed reactions with its new EV lineup gaining traction despite overall market headwinds. Infosys is navigating currency fluctuations that could impact its Q4 earnings, especially with the declining rupee. Additionally, Adani Enterprises continues to expand its renewable energy portfolio, securing contracts that could bolster its long-term growth amidst the current volatility.
On the international front, Adidas has disappointed investors with its latest profit forecast, citing U.S. tariffs and unfavorable currency swings as major headwinds. In the U.S., tech giant Tesla is in the spotlight as it plans to ramp up production to meet global demand despite supply chain disruptions. Over in Japan, Toyota is seeing a dip in its stock as the company grapples with production slowdowns linked to parts shortages. Finally, European giant Unilever is reportedly adjusting its pricing strategies in response to inflationary pressures, aiming to maintain its market share without sacrificing margins.
Switching to economic and geopolitical factors, the Reserve Bank of India, RBI, is under pressure as the Middle East conflict poses risks to inflation and currency stability. The Federal Reserve in the U.S. may delay interest rate cuts due to escalating tensions impacting global oil prices. Meanwhile, trade developments are being closely monitored as disruptions in oil supply could have far-reaching effects on trade balances, especially for energy-importing nations like India.
To wrap up, investors should brace for a volatile trading day in India, with Middle East tensions continuing to affect market sentiment. Keep an eye on key support and resistance levels for the Nifty 50, and be mindful of sectors such as energy and trade that are particularly vulnerable to oil price fluctuations. Internationally, geopolitical risks are driving market volatility, and it's crucial to stay informed about developments in the US, Europe, and Asia.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts and comments and follow for more such updates. This is Sarah.
And Joe, signing off.